Natural gas is jumping back above $1.64 and is trying another attempt to snap its losing streak. The counter-move gets a bit of help from the US dollar, which is retreating a touch just hours before the US opening bell. Tuesday saw US nat gas prices exhibiting volatility, with a recent decline following a holiday-induced gain. This fluctuation reflects traders' attempts to identify a market bottom amidst technical oversold indicators. Concurrently, fundamental constraints, such as limited control over production and external policies, contribute to the market's unpredictability. Early price action on Tuesday suggests a potential bottoming out for US nat gas. The market is presently oversold, a term denoting a significant drop in prices over a 14-day period. However, genuine oversold conditions occur when selling pressure alleviates, particularly when hedge funds cease liquidating their long positions. Hedge funds have increasingly adopted a bearish stance towards US natural gas, with positions reflecting expectations of price declines. Recent records indicate significant selling, leading to a substantial reduction in long positions. This pessimism stems from historical difficulties in accurately predicting market turning points and is compounded by higher-than-average gas inventories in North America and Europe. Latest weather forecasts anticipate light demand for the remainder of the workweek due to warmer temperatures across the U.S. interior. Forecasts from February 26 to March 4 show discrepancies, with the European model predicting light demand and the GFS model anticipating colder conditions, potentially affecting demand. Ultra-low futures prices are sending the strongest possible signal about the need for a slowdown in drilling and production to help rebalance the market. The number of rigs drilling for gas averaged just 119 in January 2024, down from 162 in September 2022, a delayed response to the fall in prices after they spiked following the Russia-Ukraine conflict in February 2022. But the rig count has been broadly constant for the last 5 months, and well productivity has continued to increase as companies focus on the most prospective locations and drill longer horizontal well sections. In addition, more gas is being produced and captured from wells drilled primarily to extract oil, adding to production growth. The slump in real prices to multi-decade lows is signaling the urgent need for a further slowdown in well drilling and completions. In recent days, several gas producers have announced plans to cut capital expenditure and reduce the number of active rigs and completion crews. In the months ahead, exceptionally cheap gas should also maximize more gas-fired generation at the expense of coal, eroding some more of the excess stocks. Nat gas prices persist in exploring the downside in search of a seemingly elusive bottom. While traditional technical indicators point to oversold conditions, as a trader, interpreting this as a buy signal is premature until there is confirmation of a bottom. The likelihood of this confirmation increases once hedge funds cease selling. From a daily technical perspective, rather than focusing solely on a specific price level, our attention is on a shift in sentiment towards bullishness. The clearest indication of a bottom will be a change in the prevailing pattern. However, the strongest signal would be the occurrence of a lower low followed by a higher close, or what is known as a classic closing price reversal bottom. Today, we have already witnessed a lower low, currently at $1.62. Now, all that remains is for the price to close above $1.67 to initiate the process for a short-term bottom. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.